My portfolio is down about $5,000 in the past week. With the markets dropping, everyone is seeing losses in their portfolios, and it's hard to deal with. But I'm going to tell you exactly what this means for me and what I'll be doing going forward. For those of you who watched my recent video called What My $155,000 Canadian Portfolio Looks Like, you will have seen exactly what I'm invested in and that my total portfolio amount was valued at around $155,000. Now, as you can see, it's only valued at $150,000. So within a week I've lost about $5,000. The market is struggling. But what does this mean for me and what will I do about it? Well, it honestly doesn't mean anything to me. And I'm not going to be doing anything except what I've always been doing. I'm going to just keep buying and dollar cost averaging. This is a great opportunity for me to stock up on even more shares of everything I already own. At the end of the day, I believe in these ETFs and the companies within them long term, and I would be foolish to sell them over a little bit of loss. I like to think of it as this: when my investments are up, I keep buying them for a premium. And when they are down, I keep buying them at a discount. Seriously, there are some great stocks and ETFs on sale right now. This type of dip in the market is honestly a good thing for dividend investors who are consistently buying and adding more to their portfolios. Of course, this type of downward trend in the market can be very scary and might be a cause for panic for investors who might not have the stomach or risk tolerance to look past that. But when you are an investor that is thinking long term, you know that the best thing you can do is stick to your plan of consistently buying solid companies or ETFs that hold baskets of these solid companies. It all evens out eventually, and as you will hear often, it's about time in the market, not timing the market. You can take a look at the long-term charts of the S&P 500, for example, and you will see that overall these dips and crashes that have happened over the years are just a blip in the big picture for long-term investors. If you're someone who is holding for 5, 10, or 20 years, this is not a big deal at all for you, and I fall into that category too. The main focus for you shouldn't be about your portfolio value going down or even up. The main focus should be on making sure that the companies or ETFs that you are holding are good quality and have good historical records for long-term reliability. So again, I will be doing absolutely nothing different from what I have been. I'll keep adding more to these positions in the form of new contributions and drips. I am a strong-willed, long-term investor with a strategy and a goal, and it is going to take a lot more than a little bump in the road to steer me off that course. The great thing about being a dividend-focused investor is that even when the market isn't doing so hot in terms of growth, you always have that cash flow coming in from dividends and distributions. And in my case, this is happening month after month and is currently at about $1,000 per month. This is $1,000 every month that is being fed back into my portfolio through an automatic dividend reinvestment plan. I don't have to even think about buying more. It just happens. So don't panic. Stay the course. Follow a plan. Like this video. And make sure you are investing in solid companies that will always be able to recover from market dips. And if you've got dividend-paying companies or ETFs, even better. If you do these things, you won't have any issues dealing with downtrending market conditions, and your sleep at night will not be affected. As always, it's important to remember that I'm just an everyday rookie investor, and the content on this channel and my blog is not to be taken as financial advice. Always be sure to do your due diligence before investing in anything. I appreciate you all for watching and supporting. And with that, I hope you have a wonderful day. Oh, and don't forget to smash the like button. Just smash it, but be careful not to break it. It can sometimes be delicate. If you're not subscribed, you can do that as well. It will make it so that you don't miss any of my future videos. This is Passive Canuck signing off.